Hey everyone, this is Ryan B with Practical Forex Trading. This is your weekly analysis for Bitcoin versus the US dollar. The day is January 26, 2020. All right, let's get started. So this is a weekly chart that we're looking at for Bitcoin dollar. We can see the weekly specified here in our time frame, chart time frame, which means each one of these candles represents a week. If you are trading and you don't know how to trade with candlesticks yet, I strongly encourage you to research them. There's a lot of information on the web about candlesticks and candlestick trading, so definitely worth a look. Okay, so my sentiment for Bitcoin US dollar currently is mixed. And the reason why are displayed in this chart. So we've got this ascending trend channel. This is our big long-term channel, right? This goes back a few years. We see our ultimate bottoms, and then we have our next parallel up, this trend line here, this middle green one, where price fell through and pushed back above, and now we saw recently some weekly candles that kept price propelled above this line, right? So after a recent spike up, prices came down, consolidated right there, and then have been moving off. Before we can say Bitcoin is bullish, though, price needs to break through this descending trend line from November of 2017. So we can see each one of these weekly candles, right? Price here, the shadow, this very first giant candle, the shadow went up quite a ways, but price didn't close above it. Then price did close above it. Then the next week, price was rejected, right? And then we see price struggling to move above this line. The body of these candlesticks are not closing above it. We see this phenomenon happening here again. 1, 2, 3. Price goes above it, shoots back below. So our recent bullish moves. So this even last week is kind of a mixed signal, right? So our last weekly candle, price failed to close above the highs of last week, which creates a little bit of indecision. We also, the reason why I had a little bit of resistance there. So this blue line represents support. And then we've got another one right here. It's not as major, but here's our other resistance line. So if we look on a horizontal plane, we see price close above it, below it, above it, several times. So in order for Bitcoin to be bullish, it needs to do, the most significant thing you could do at this point would be break above 9,600 and stay up there. Now, if that happened, then we've got ourselves a resumption of the bull trend. And then we'd have the same scenario right here at this 11.6 line. So let's go ahead and add our, let's go ahead and look at daily. Let's get a little bit more granular. Okay, there we go. So we see price, even though it's made some pretty good moves lately, it's still in this descending channel. Let's go ahead and put our moving average on. So our moving average, our slow moving average, so the long, called the long one, we're going to go ahead and configure this to be for 200 inputs. That's what we're going to call our long or slow moving average. And what we see, like clockwork, price came up and touched the slow moving average around 9150, 9200. Just below this resistance line, and then moved away. So we've got a couple things that could happen. Let's go ahead and put our other two moving averages. Let's put a medium. This is going to be for 50. Okay, so we have a 200. We have a 50. And then I want one more. I want a moving average that represents 20. Call that our fast. And I use these three to figure out when price makes significant moves, right? So how you can use moving averages is the best way is to look previously what happened, right? So we've seen in the past when price moves above the fast moving average, well, it usually does pretty well. takes off for a while. Then if it falls below, that means it either goes sideways and doesn't really do anything, or it decreases a little bit. So recently we had price move above that fast moving average, and it gained about $1,500. But now we see price just move back below it, and that's not great. Also, this 200-day moving average, right? This is a big one. If we look at that historically, when price moves above the 200-day average, wow, that's some real big fireworks there. Here, it only did it for a heartbeat and then got quickly batted back down by sellers. So that price, needs to prove some things. But basically, what we have here is happening as a price wedge. Let's go ahead and draw a shape to represent what I'm talking about. In trading, you'll find lots of triangles, and triangles suggest price congestion, meaning it's stuck between a downtrend and an uptrend, and that's what we have happening here with Bitcoin. So we could see Bitcoin bounce around in this triangle for the rest of the year, almost, well, at least through summertime, between this 7,300 to 8,200 mark. Right, so we talked about to get bull trend, we'd have to see price above this 9,600. But in order to prove that price is not just on this long going downtrend, it's going to have to break above 9,600, and most importantly, it's going to break out of this congestion triangle. Because otherwise, the other chance is that price would just fall out the bottom of the triangle, and then we've got support at 6,600. A break of support at 6,600 would lead to, back to the $4,500 price range. So there you go. Bitcoin, I'm going to stand on the sidelines for now and wait to see till we get more proven price action before I make any moves. Okay, good luck trading this week. We'll talk soon.